Welcome to the Let's Get Entrepreneurial podcast, your go-to resource for navigating the world of entrepreneurship. In this episode, we delve into the fundamental aspects that define promising business prospects and untapped potential within various markets. From market demand and growth prospects to understanding consumer behavior and competitive dynamics, we explore the essential characteristics that determine the viability of market opportunities.
The Let's Get Entrepreneurial podcast is your ultimate launchpad for igniting ideas and skyrocketing your entrepreneurial dreams. Tune in, buckle up, and let's unleash the entrepreneurial spirit within. Your two hosts will be Professor Gary Palin and serial entrepreneur Ryan Budden.
Hello, Ryan. How are you doing today?
I'm doing brilliantly. What about you, Professor Palin?
Things are going very well. I'm wrapping up my summer session 2 course, a couple more weeks, and then already planning the courses for the fall semester. It's coming on me fast and furious.
Oh, I'm sure you're just as excited as the students are.
Oh, absolutely. Today I want to talk about an area that's very interesting to me. It's good opportunities for an entrepreneurial venture, and specifically, what are the characteristics and the components revolving around good opportunities?
Yeah, that's a great one. You and I are both ideas people. You love the experience of coming up with a new idea, thinking through that new idea, but differentiating between that and an actual opportunity for a business is really the key to success.
When you're looking at an opportunity overall, you're looking for a favorable circumstance that offers potential for creating a successful venture. Simple as that.
Yep, there's the definition.
But you're correct. The distinction where most people get confused is the difference between an idea and an opportunity.
Right. Ideas are a lot of fun.
They're a lot of fun, and you and I have too many of them. Some people struggle to achieve them, different personalities. The idea is really the brain twitch. It's the overall concept, the idea, the thought that as you're moving forward, observing, viewing, studying, doing market research, you come up with a brain twitch for a potential venture.
And we all know people that are full of ideas, want to sell you the newest and greatest cooking machine or the widget to do this a little bit better.
When you're looking at an opportunity, putting it very simply is, can you monetize the idea? Is there a possibility on how you monetize it?
Is there truly a market available?
It's very important, though. I see many people will seize the idea and then move to commercialization without going through that step of analyzing it.
One of the biggest pitfalls, if not the biggest pitfall of early businesses that I talk to, is the amount of research that they've done. Really simple things get missed in the excitement of what the idea is.
And choosing the wrong opportunity can have a tremendous slide downhill into a pit to oblivion.
Those are dire words, but they're probably pretty accurate.
Oh, and you start hitting that slide. Sometimes it's hard to turn it around.
It certainly is. And where you call quits, when you call quits, how you call quits is a very difficult thing to assess in the moment.
The repercussions of the wrong opportunity, there are a number of them. Like the big one I think of is wasted resources, both in terms of tangible resources, financial resources, and probably most importantly, your time. Most startups are limited in resources, and if you burn them on the wrong opportunity, very often you can't recover.
Yeah. And anyone familiar with opportunity cost, the resources you're putting into this bad idea could have gone into a good idea. Very quickly, the two paths that could have been taken diverge from each other quite rapidly.
Choosing the wrong opportunity, you can cause reputational damage both to your venture and to yourself personally.
That's always a fear. We only have so many bridges we can walk across, and there's a certain number of times each bridge can be used. Depending on how good the connection is, then the more you can walk across it. But you always worry that, is this the last time I'm going to be able to walk across this bridge, use this connection, call this person, whatever it is.
One of the areas that I find the most difficult in a startup is timing. And timing is very critical. And if you choose the wrong opportunity, you may miss the timing on the strong opportunity.
Right. I hear a lot of people say timing leads to traction. If you don't have the right time, you can't get the traction, and traction is what drives the business.
By missing that timing, you may miss that entire window. With that, the lost growth opportunities, because if you're early enough in the marketplace, that's where there's some substantial growth, and you don't want to miss that window.
COVID-19, for as tough as it was for some businesses, was the right time for a lot of other businesses. We saw the technology healthcare industry just absolutely explode. And there were a lot of businesses that had the right timing, were just developing tools at the beginning and were able to turn that into traction.
With that, the impact on the entrepreneur, you can have a loss of confidence, especially if it's a first-time entrepreneur, and it can result in founder burnout.
Absolutely. Failing is hard. We've talked about this a lot on this podcast and personally. We do still have a culture where failing is not the most acceptable thing. Inside the entrepreneurial world, it's not as frowned upon, but to the world as a whole, saying that you didn't come out to be successful on a business you're driving is still a very, very difficult thing.
Yeah, definitely. So there's some serious ramifications for choosing the wrong opportunity, which points to why it's so important before you make that final leap to really analyze this. That's the negative side to the wrong opportunity, but the positive side has a lot of factors associated with it also. One is we just talked about having a competitive disadvantage. This could give you a competitive advantage.
I like the transition. We've now scared everybody, so let's show them where the positive light can be.
Well, I always like to know what's the bad things that can happen to me and what's the ramifications of that, and giving me reasons to avoid those bad things.
Right. So you're saying opportunity cost. Instead of it being a missed opportunity, this is an opportunity for you to get ahead of somebody else, to be in the right place when traction takes place.
If you're pursuing a good opportunity, it really stimulates your innovation and creativity. It's like a snowball effect.
Yeah, absolutely. And everybody around you, your first customers, the people you're working with, become the sounding board for that.
That will lead to long-term sustainability, which is the ultimate goal. It allows you to have stronger resource allocation. It allows you to make greater economic impact.
Yeah, if you're the first one in the market and you can really do some education around that, or take the benefit of a niche market, as we talked about in our last podcast.
I'd like to talk about the specific characteristics of a good opportunity, which is, I think, ultimately what people want to know.
Yeah, that's probably why people have tuned in today.
First one, to me, a good characteristic is there market demand. Is there a sizable market with a demand that identifies and solves a real problem or fills an unfilled customer need?
So how would somebody know that? If they have an idea, how do they come to that conclusion?
I would look at market research.
Yep. Do you have any go-to places?
Not one specific go-to place, but I start looking at a lot of the databases, and I'm fortunate I have access to tremendous databases through my university position. And that's typically where I go to. But as simple as you can start searching Google and looking for databases that are free. You can also go to the public library. They have access to databases when you're looking for research. Those are some things that I would say someone can, especially a first-time entrepreneur, can jump into.
That's ultimately, you need that hard data to make the decision to move forwards. One I like really early on, go see if there are some forums out there. Go see if there's a conversation about what you're talking about. Because oftentimes that's a really good determination. If you can get onto a forum where people are actively engaged, actively asking questions, and then addressing that, that's a really easy step into an instantaneous community.
That's a good point, because my next go-to when I'm looking at marketing research with secondary data is then I will go speak to potential customers. What you just outlined is something I hadn't thought of, because you can get potential customers in the forum and jump very quickly into that to see if there is a need. Go out and talk to customers.
And we live in a global world. A lot of times those customers aren't just down the road.
Now, another area that I look at that I think is critical is differentiation and a unique value proposition, because you don't want to be the same as other companies.
Yeah. Being the same as other companies typically means you're competing against a much larger company, or a company that at least has a lot more experience than you do. And that's an extremely difficult thing to participate in.
Yeah, and if the space is crowded, trying to gain some traction to secure market share is extremely difficult with people that have been in that particular marketplace for a long time.
That's exactly right. It often leads to the low cost race. And as a startup, very, very few times are you going to win the low cost race.
Now, another characteristic that I like to look at is scalability.
Okay. So for the people that are novices, what does scalability mean?
What's the growth potential? Because I don't like to start small businesses personally. I like to look at businesses that have growth potential of which I can ultimately exit. We've had podcast episodes about exit strategies. Then I can move on to the next business venture versus I'm not trying to create a job for myself. I'm trying to create a business. So if there's no growth to that, there's no scalability.
And I think most people that are really taking entrepreneurship seriously, listening to this podcast, that's going to be their goal as well. How do they create something that's a different entity than themselves?
Another area that we've spoken about in the past also, we really jumped in this specifically with cash flow. Is this thing profitable and financially viable? So can you generate enough positive cash flow, generate enough profits for it to be viable to jump into?
Not only is there a market, but are they willing to pay for something?
And enough that you can not only just financially sustain the venture, but that you can personally make a profit. Because I don't know about you, but I am a capitalist.
Certainly like to make money. That's a big part of the reward system that we participate in. If you're adding value, you're typically earning money.
Yeah, and it's not the sole or primary goal, but there has to be the reality of paying the bills.
That's exactly right.
As we've spoken about in the past also, this is extremely hard, tremendous amount of work. So you should be rewarded for that work. And part of that reward is financial.
That's right. The personal satisfaction is a huge thing that keeps people in the game of entrepreneurship, but the financial reward is typically what brings people to it.
Another characteristic, and we talked about it from the downside of the wrong opportunity, but the positive side is I like to look at market timing. Is it the right time?
And what's your go-to way to determine that?
That's the hardest thing for me to do, is determine when the timing is right. We were talking, I believe in our last podcast, we were talking about the success of GoPro, but their timing was so beautiful. Not only was it an interesting idea and it hit all of the issues of market demand, differentiation, but it was also timed at the same time that YouTube was becoming popular. I believe that if YouTube hadn't been skyrocketing, we wouldn't see GoPro the way it is today, or wouldn't have skyrocketed as fast. How do you predict that timing? Is that luck? I can't tell you.
Yeah, there's a little bit of magic in it when it's to that type of a degree.
There's two types of luck. There's bad luck and there's good luck. I think over time it equals out.
Very karma way of looking at it.
I try to study as much as possible the trends of the industry. Again, to go back to a previous podcast episode we did about scenario planning, I would suggest someone listens to the scenario planning component, because that helps you try to get a feel for what's coming into the future. When it happens is so difficult. It's extremely difficult, but you try to predict, you try to do the best you can. But if you jump too soon, the market's not ready for you and you expend all of your resources, energy, and effort. And really what you're establishing for the people who follow you in the marketplace.
Yeah. You have to then tread water for long enough for the market to catch up to you instead of getting pushed with the wave of the market.
Yeah, and it's very frustrating when the timing is not with you. Entrepreneurs tend to be visionaries, and they tend to see the world as it will be, not as it is. Sometimes their vision goes out so far, they don't have the resources for the world to catch up to their vision.
It's an eloquent way of putting it.
Thank you. That's why they pay me the small bucks at the university.
Here we go. With timing, I had somebody tell me when I was first getting into entrepreneurship, you should never launch a business if you aren't scared that somebody else is going to do it.
That's true. I would agree with that.
At the time, it didn't make sense to me. I was thinking, scared somebody's going to steal the idea. I don't really get it. I think everyone that's had ideas for businesses knows what I'm talking about, and I'll try and describe it just a little bit. It's the feeling that this is such an addressable market. Someone else is thinking of this right now, and they're going to do it. How does this not exist yet? Those types of feelings really are the precipice of, I need to do it. Whereas other ideas, I have them all the time. I think, wow, I could make something of this. And that's the difference. I could push it, or the market is going to make this happen, whether it's me or somebody else.
Moving the market to force timing, I've never been able to successfully do it.
No. Well, unless you have a lot of money, I think you don't have the ability to do it.
I think of individuals like Steve Jobs that could push timing. With that is also, and I'm looking at the characteristics of a good opportunity, I'm looking at the accessibility of resources. Not only can I secure them, but are they possible to secure?
Do you have the right connections? Are you in the right place?
I very often think in terms of, can I secure the right talent? Is the technology, is the infrastructure ready? Sometimes technology is not caught up. For example, one that I did that was involved with geofencing to identify lost dogs and security. One of the big problems we had with that is battery technology did not catch up with the other technology. We had to limit our target market because the size of the receptacle that was around the collar was fairly large because of the battery capacity, and that limited us. So the technology, we were a little bit premature. Today, you're seeing more and more of that technology because battery technology caught up. Now, another area that I like to look at with the characteristics of a good opportunity, is there an entrepreneurial fit? Does it fit within my team's skills, expertise, passions, basically for the founding team? If there's not a fit, it usually tends not to work out well.
You've highlighted a really important one for me, and that's the passion of it. If you have an idea that you're not passionate about, it's not going to be successful. And that doesn't bash the idea in any way. The amount of effort required to actually be successful with something dictates that you have to be passionate about it. It cannot just be a money play, or you're not the right person to do it. And you'll end up despising the fact that you're forcing yourself into it.
The work that we're doing with the Janus assessment is an example of that, because we both have a really very strong passion for entrepreneurship. We're very curious on how do you know someone's entrepreneurial? What are their tendencies? And that drives us to come up with the answer, which I believe we have. And also with that, we're interested in the entrepreneurial cultures of business, which is work we're working on right now, is to develop an assessment of measuring someone's entrepreneurial culture and how to improve their entrepreneurial culture. We both have a deep passion for that.
We do. And I think it's because we've stood out in our personal lives and our careers because of it. So understanding what that difference is, how to measure it, so how to quantify that there is an actual difference, we're not just crazy people, and how to then improve ourselves and improve other people that are on similar journeys to us.
Definitely. Now, another characteristic which ties into the scalability we were speaking about previously, is there a market growth potential? Is the emerging market, will it support the growth of that scalable venture?
That's really important. Oftentimes, you can get a false positive. If you are really active in a small community, that community can sound very large. It can seem all-encompassing. But if you go back to the data and look at actually how big that market is, it may be huge. You may be right. Or the assumption might be totally off, and you're just sitting in this reverberation chamber.
Risk-reward balance is another that I like to look at, and that's very personal. How much risk is someone willing to take versus the reward associated with that opportunity?
We've talked a lot about this, and personally, I don't know that it's ever come up on the podcast, but in dating lives or just friendships, this can be a big thing. I tend to have a very, very high risk tolerance. I'm willing to bet the house, if you will, over and over again because I'm passionate and I'm energetic, and that's the way I'm risk orientated. I am now engaged to somebody with a very, very, very different risk tolerance. Understanding that and how that affects conversations and how I have to factor somebody else's risk tolerance into my decisions now is a huge component of that.
You have told a story about when you were a graduating senior in college, when I asked you, have you ever lived in a car, and measured the risk at that time in your life. As you move forward, you're seeing there are changes associated with how you have to view risk because now you have another person involved.
I have another person involved. I have assets that I've built up that could potentially be lost. Whereas when we initially had that conversation, I was quite literally a broke college kid.
It must be interesting to you to look back and say, damn, he was really right.
The analogy has held true. That's for sure.
Another area that's very important when you're looking at a characteristic of a good opportunity is customer validation. And that ties into minimum viable product, lean startup thoughts.
Yep. Early stage feedback, making sure that people are happy, you're still going in the right direction, and you're not pushing the feature or the product out there. It's getting pulled by the people that are actually using it.
Yeah, and that customer validation, that doesn't mean your friends and your family.
No. This is a paying person that hopefully you have no other relationship with.
Yeah, because you need truly honest feedback, not someone trying to make you feel good and patting you on the head.
That's exactly right.
Another aspect I look at for characteristics are, what is the competitive landscape? How many people are in the field and who those people are?
And that often can take quite a lot of research. And I encourage people to really take their time with that. I also would encourage people to reach out to them, talk to them, see if you can garnish some information from them. People's assumption is typically that others are not going to be willing to talk to them because they have this fear associated with it. In my experience, people are pretty willing to talk to you.
I find that also. In pre-Amazon's existence, I would have people coming up with a widget or a tangible item that they were looking to manufacture. And the first question I always ask them is, can Walmart sell this?
Yeah. If so, you're in big trouble.
Or early software, I would say, can Microsoft create this and bundle it into Windows?
Right.
So it's not just how many competitors you have out there, it's who the competitors are.
Right. And especially in technology, that's becoming more and more of a big deal. One of two ways. It can be a boon. You can realize that these large tech companies are gobbling up competition so that they can take their IP and use it in their own way, shape, form. Or it can be the ultimate destroyer. Are you so easy to duplicate from either a personnel perspective or a product perspective that you're just going to get squashed the second you show any traction?
Going back to the Microsoft example, if people would say, well, yes, they could, I would say, okay, now the question is, what would it cost Microsoft to develop it in-house versus what would it cost for them to acquire you? And if it costs them less to develop it in-house, don't do the business. If it would cost them more to develop it in-house, then there's a potential exit strategy it's worth pursuing.
Right. And that equation is typically, are you enough of an expert that you are shaping a field? You yourself are not replaceable.
I mentioned the Walmart example, but I said pre-Amazon. Now, Amazon's changed the game because now you can develop a tangible product, and the issue is, what would be the impact if I sell it through Amazon?
Right. You can also do test markets through Amazon. You can purchase and drop ship 50 of them, see how they sell before you put a really large order in.
Another characteristic that I like to look at very deeply is, do I have a sustainable competitive advantage? That's very different than a competitive advantage.
Right.
The sustainable competitive advantage, you're looking at issues of barriers to entry. Are they difficult? Do you have some proprietary technology? Your patent structure, is it defensible? So that will allow you from a long-term perspective to maintain a competitive advantage. But versus if you're saying you're first mover and someone comes in and crushes you, that does you no good.
And more in the modern day world, the team, do you have a following in and of yourself, is something I'm seeing a lot of with early stage startups.
The last characteristic that I look at is flexibility and adaptability. The reason for that is market is continually changing. With this opportunity, are you flexible and adaptable enough to shift with the changing market conditions?
That's a skill set that can be developed.
Those are the overall characteristics that I perceive from looking at a good opportunity.
That's a pretty good rundown. We've really outlined how people can differentiate between an idea and an opportunity, the negatives if they're picking the right ideas and trying to force them into opportunities, and how you distinguish between the two.
When I'm looking at some real life examples, I think of Richard Branson with the Virgin Group. I think he's probably the best that I've ever seen at that, because he's taken that Virgin Group brand, moved into obviously with records, to airlines, to entertainments, telecommunications. It's amazing how he's been able to identify opportunities and seize it under the umbrella of the Virgin brand.
And the number of times he's failed, cut the failure, and moved on very quickly is quite incredible.
Anita Roderick was really interesting in identifying opportunities. She created the Body Shop. She saw the opportunity to sell natural beauty and skincare products with a sustainable and ethical manner.
That's fantastic. Approaching that triple bottom line that you and I like so much.
The last one I think about I thought was awesome is Phil Knight, the founder of Nike.
Yeah, especially with the movie that's just come out. Very topical.
Have you seen the movie?
It's brilliant.
I loved it. I thought it was really good. Any concluding statements on looking at characteristics of good opportunities, Ryan?
I would say rely on the research is my final thought. The feeling that you have when you're going through this idea matters quite a lot, but the hard research is really where you're going to see if it's worth pursuing or not.
Yeah, definitely. That's where I was going, was to conduct thorough evaluations and take calculated risk.
Absolutely.
Sounds like a game plan. Well, let's get entrepreneurial.
Let's get entrepreneurial.
As we wrap up another episode of the Let's Get Entrepreneurial podcast, we extend our gratitude for your presence and attention. Your dedication to the entrepreneurial spirit fuels our passion for creating this podcast. Check out ProfSpirit.com to discover resources and courses designed specifically for innovators like you. Stay on the cutting edge by following us on Spotify, Apple Podcast, YouTube, and other platforms as it is released. Until then, keep the entrepreneurial flame burning.